Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, November the 22nd, the year 2019. Let's talk trading. It's time for the weekly wrap up. I hope all the traders out there have had a profitable week, and I hope none of your trades that were losers were more than what you were willing to lose per trade. And you know what I'm talking about, the risk management. Okay, remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And that Forex trading is very, very, very risky. And because of that, if you need financial advice or guidance, seek it from an accredited financial professional. That way, when you lose your money or they lose your money, you know that it was lost by someone who was accredited. Okay, disclaimer out of the way. Oh, the week. It looks like we're going to have an inside bar on the weekly chart for next week. And we are in the lower wick zone of the previous week's candle, and all the gaps filled. I think there was one down here yesterday that hadn't filled yet. So once again, showing here that these gap trades can be profitable. And you don't necessarily have to enter them on the first day of the week, but usually that's the best time because that's when the gaps are happening. For the year, we are down 99 pips off the open. Let's see, don't I usually have a D1 chart here? So you can see that there. On the day, what an interesting day we have here. Now you see, this was the first day of the week, the high and the low. This is the first day of the year's low. And this is the first day of the month's high. So today we broke above the low of the first day of the year, but came back down. We also broke below the first day of the week and came back up. So you see, we're winding up right at the moment inside that range of the first candle. And you can see because of that, there really wasn't much range for the week. The weekly open chart here, you see it up and back through one more time. Then you see here a couple of times it entered the short zone and prices fallen back out. Weekly range only 79 pips when you have an average of 140. So, you know, very, very, very weak range. Inside bar trade here. You see today we touched the inside bar from 2 months ago, that high, and then bounced off it. You know, see 47.3. Well, we missed it by 2 points, but sometimes close is good enough. And it's funny. My emails, sometimes I'll think of a topic for today, for the daily video, and then either that same day or the next day, I get all these emails from other people, different ones I subscribe to that talk about the same subject, but not necessarily trading. Today I got one that, ties in with what I've been telling you about trading. Trading, we're engaged in something where the outcome is not guaranteed. We don't know what's going to happen next. And so to expect something to give us a positive outcome each and every time is ludicrous, and almost to expect that we get a positive outcome, more than half the time, in a way, is ludicrous because we can't control the outcome. There's only certain things we can control. But what the problem is with a lot of traders is they're trying to make something that's good perfect. And so I got this email today and it says, use the 80-20 rule, but use it this way. When you get something 80% of the way there, start using it. So for example, if you're trying to learn one of these methods and you think you got it, don't, once you think you got the fundamentals, all you have to do is then start trading, but maybe trade it at the rate of a dime a pip. So you get to learn, because you don't learn trading by reading about it. You learn trading by trading. It's the same thing with just about anything else in life. You have to do it. For example, you want to box. You can learn about blocking shots all you want by reading books and watching videos. But when you really learn how to block shots is when you step in the ring and somebody, punches you right between the eyes or right on the nose or right in the mouth, or gives you a solid gut punch. That's when you'll start to really learn how to block punches, or putting. You can watch Tiger Woods and all the rest of those guys how they putt, but until you get out on the green and try it yourself, you're not going to be successful. So you can watch my videos, other people's videos on trading, and we can show you wick zones, buy zones, rat zones, squiggly lines. But until you get in there and actually start experiencing it and doing it for yourself, you're not going to learn how to trade. Ranges for the week, only 5 over 100, and they were all pound pairs. And on the daily, you see there was a little break of about 3 pips or so over the previous high. Yeah, if you do the math here, it says 4, but if you look here, you can see it's 3.6. So this is just rounding. And we have that daily high right here. You see there was a couple of holo shorts that you could have participated in. Pivot point was, once again, with these tight daily ranges, pivot point's usually going to be closer to the open in the zone, so no real bias here. Taking a long would have probably gotten your fingers burnt. Same thing here. Here you might have collected a few pips. Short, once again, maybe a few pips, maybe you got your fingers burnt. It's just a very, very, very range-bound day. And when you look at it, you're talking 25 pips. If you're up 5 pips on a day like today, that's 20% of the range. I mean, really, what are you going to go? What are you trying to accomplish when you only have 25, 26 pips of range? I mean, think about it. Of course, maybe you could trade a different pair like the pound pairs, but I like to stick to it. Now, notice one thing about the VWAP. Now, the VWAP really is a squiggly, but price has been tending back towards the VWAP. Gets a little bit away and comes back. I just don't like having squiggly lines on the chart. I just want to know what the current VWAP is. Rat zone overlap. As you can see, not much happening on there. And we already showed we took out the pivot. For the week, looks like we hit every pivot. So you see Friday, Thursday, Wednesday, Tuesday, Monday. We took out every pivot this week. And we even took out one from the previous week there. So right here, we've got the 11.4 pivot, 108.12 right down here for the month. So it looks like we've got a few pivots below and a few old pivots above, which may or may not get taken out. I'm not sure why I had that on the pound, but even on H4 on price action, you can see price doesn't like staying between the lines. And, bumping things up to H4, if you're having trouble at H1, even though price is the same, all H4 does is it slows you down. So instead of getting maybe one trade every hour, you get one trade every 4 hours. So, for example, you see where price opens, you get a trade going outside those lines. So right here, you see price close there. Which way did it go? If you took that short, maybe you scratched the trade, maybe you took a pip. And then if you took this long here, you jumped in, you got a few more pips, but that was a couple of days ago. as far as today goes, you can see one ball here, red at the line, paid off. One ball at the bottom, green at the line, paid off. So you just, if you're, some guys go, yeah, I did 20 trades yesterday. I go, really? Yeah, but I lost. And then the next day, yeah, I did another 20 trades. And yeah, you lost. No, if you're doing that many trades and losing, then you need to do less trades and start winning. And then you increase your trade frequency. And here we go in the wick zone. I mean, you can see here, yesterday's range was pretty much wicks. So what do you expect to happen? Yeah, once again, price is leaving the wick zone, but as soon as it leaves it to the south side here from the top or the north side from the bottom, you're going right back into a wick zone. So it's just telling you, take what you can get. And maybe it's, and when you have a 20 something pip day, 2 pips is 10% of the range. So sometimes when you think in percentages, you can fool yourself. Other times things make a lot more sense. And in fact, there was a trader saying, how come this didn't show up on this one pair I was trading? Well, if price isn't in the wick zone, it's not going to tell you about trading, because you shouldn't be trading the wick zone if price isn't in the wick zone, because you've already missed the trigger. Looking here over the week, you see we've got the weekly open, and we did hit the open minus half of the minimum ATR here, which was ATR 2 this week. And so we touched it there, and now we're heading back towards that weekly open somewhat. And here's today's open, just 4 pips above it. So, using these ATRs, okay, I got to remember something here. It's the ATR lines as opposed to the ATR lines high-low. These calculate the distance from the open, okay? The ATR lines high-low calculate the difference. It's dynamic, meaning if the day's high or low changes, then where the zones lie will change. They will move, because you're looking to do a retrace off or out of the ATR zone, as opposed to looking to do an expansion from the open to the ATR zone. And if price is going to hit its ATR, then it has to hit one or both of the halfway points. I mean, if you have a 6-inch box, right, and you got a ruler 12 inches, it's got to cut across either one or both of those lines. It's going to stick out of that box one end or the other, right, if the ends are open. That's just the way it works. So, using that knowledge, that can give you targets, and that can give you, a trade. And what I mean by a trade is that can be your method, where you take the open and you seek out half the ATR. Okay, today on the daily, you can see price didn't even get that far. The average range here is 46. I'm not sure what the ATR is. I think maybe on the new modified market price indicator, show ATR percent from open. So right now, ATR 14% from open is 8%. So I think that just about wraps it up for the week. I don't remember if there was any questions that were hanging. If I didn't answer, let me know. So it's pre-Black Friday weekend. Be safe out there. The weekend before Thanksgiving, everybody's trying to, separate you from your hard-earned money. So, be wise. And remember, you don't have to be perfect. Don't expect perfection when trading. And most of all, always remember, never forget, it's not what you trade, it's how you trade it. So come back next week and drain the banks.